Good evening, this is Nick Inman from VolumeProfileTrader.com, Monday, November 21st, and so over the weekend the Super Committee failed to get an agreement on the debt issue here in the U.S., and it spurred a sell-off today, but that sell-off came into the support zone we've been talking about, we've been waiting for. We've seen our breakdown from this consolidation pattern, and we were towards the end, right before this was breaking out, we started to cover how at first it looked like it was breaking out to the upside. That's what we were covering, that's what we were expecting, and then things started to change. We covered that. We had a nice trade to the downside. If you traded this move, you should be very profitable, and you should have taken profits both Thursday, Friday, and today. So now we're looking to see if this support level can hold us, if this volume level can hold us support. And as far as today, we got a little bounce off the lows, but it was definitely nothing major. We saw a gap open today, so this candlestick doesn't accurately show what went on in the market today. But if I use the SPY, the S&P ETF, you can see we had a gap lower, and we have a hammer pattern bottom. It's basically meaning hammering out a base, and there was nothing meaningful today in today's bounce. But it's a level where we can define risk and basically say if the market goes any lower than this level, we know we're wrong, we get stopped out for a small loss, and what we're expecting is a bounce back up to the 121, 122, maybe even the 123 level on the SPY, which would equal 1210 through 1230 on the S&P. So there's potential for a bounce. Tomorrow they have the FOMC minutes at 2 o'clock. That's the Fed coming out saying if anything's changed from their perspective, and also tomorrow morning at 8:30 is GDP. So there could be some market movement tomorrow. If I had to say which direction, I would say to the upside, which is a good thing because we want to see a bounce off this support level. If we don't see a bounce, and let's say hypothetically speaking that the market just keeps moving lower, well, that's telling us that the market is very weak, and this move higher from the October lows up to this congestion level was just one big opportunity to get out of the market before it takes another leg lower. So it's tough to tell right now, but we have a low risk and probably a high probability trade to the upside. I bought a little bit of TNA today. That's the bullish small cap ETF times 3, so it moves 3 times as fast as the market. But I'm trading that because I have my stop defined right under today's intraday low. I don't want to be involved from the long side if the market can't hold these lows. These were support levels that we were looking at. So let's look at a few more names and see what's going on in the overall market. Okay, the Nasdaq. The Nasdaq it looks like it's at potentially the best level from a buying standpoint. And the only reason I say that is because it's really this value area low, which is this blue line, other than the August through October mess, it was really 2 times, even 3 times a good buying opportunity, and we're looking for that again. And one other thing about that was all of those sell-offs prior came from the top of the value area, and they came all the way down except for really this one, and gave you an opportunity to trade right back to the top of the value area. So will we see that again? Maybe. It's tough to call now, but the important thing is you can define your risk by putting a stop right under today's intraday low, or you can give it a little more room. You can put it below like 2180, for example, in the Nasdaq 100. But the idea is you're playing for a bounce because that's what's happened in the past, assuming you exclude, this mess right here. But theoretically speaking, you were right to be a buyer on this dip anyways, because we did have a move back up to the top of the value area. So even though the market looks weak, it looks like we have a short-term high probability bounce to the upside. Moving on to Apple. Apple it struggled since it broke down from this $400 price target. We've been all over this. We've seen this move down, a continued follow through, and now we are at potential support. The 200-day moving average is right below these levels, around 365-ish. So we're in that general zone. And also this dotted blue line, that's the value area low for this range. So that's what we're looking at now, and we're looking for, with the overall market, we're looking for a bounce in Apple, just a snapback to anywhere from 380 up to 390. And I think that if you are long, it's an opportunity to scale out of some more Apple. But if you don't have a position in Apple, this could be an opportunity for a nice trade. So look for a bounce in the overall market, and Apple should be, although I'm not sure if it will outperform, but it should be one to perform. So let's see what else we have going on. Okay, let's check out Nvidia. Sorry about that. Smoke detector went off. So back to Nvidia. I lost my train of thought, but Nvidia was one that stood out among the rest definitely today, up 5%. And what we're looking at here is we have value area low, blue line, both, and then value area high way up at 1950. And we have our point of control around 15. But we have this 13, let's call it $13.50 to $15. That's just been one big consolidation zone, and we're seeing bouncing off of those levels. You see the volume today, especially, it was good volume, especially relative to the last couple of months. So if Nvidia starts popping its head, I'm not saying to pile in now, especially on a up 5% day, but if it starts to poke its head above this 15 level, this point of control, and stays there for a couple of days, then it's probably going to give you an opportunity for some upside potential, hopefully to the 17 to 18 level, but it's hard to tell. So keep this on your radar, and if you want to, you can buy a little bit, and like a fourth of a position, and just keep a stop under today's intraday low. And the important thing is not to pile in, because this may not work out. We are still in congestion, and let's face it, these moving averages, they're still moving down, so it's not like you're buying on the dip here. You're trying to buy a turnaround where we see this downdraft, sideways consolidation, and then we have a higher base relative to what occurred back in August through the beginning of October, and you're looking for a breakout to the upside. So this is this is just the kind of market we're in. We're looking for turnarounds to the long side, and if you're a short seller, there have definitely been opportunities to make some money from the short side, but the long side has been a bit tougher since that October rally. So I have a few more names for everyone. Okay, another name, IBM. This is a stock that Warren Buffett has accumulated, and he actually has accumulated this around the point of control level. I think he has a cost basis around, I call it 165. It's around there. So he's profitable, and if this is a name that you want to get involved in, the uptrend's definitely intact. We're still making higher highs and higher lows, so that's good. but you need to have the best buy point you can within the uptrend. And if this would be a new position for you, realize you're buying up towards 200, but we have some decent volume support at the 176 level, which was back at these recent lows. So if we get a pullback down to the high 170s, you can pull the trigger and then have a stop below these recent lows. So below 175 and a buy above 175. That's where you want to get involved. And for a play back up to the highs or really past 200. So I have another name, which is Etrade Financial. This stock has been purchased by David Tepper, which is a big-time investor. Many people follow him, and I don't know anything about the fundamentals of this company, but if you watch or follow David Tepper and you find that this could be a name you want to get involved with, well, here's your trade, because it looks like we have a potential double bottom right at this $8 level. We have a buying tail back in October, and we get a nice move higher. So if you're looking to get involved, I would have a stop. You could either have a stop below today's lows, which is, the low was $8.06, so maybe a stop at like $7.92, just somewhere under $8, because $8 it's a psychological level. So, or you could put a stop below October's low, which is $7.75. So it's a little more risk, but it's definitely the lows, and it ensures you that if it goes below those levels, then E-Trade probably has further to go to the downside. But a big name like this, David Tepper, accumulating this stock at these levels, it's something that you want to be involved with if this is, that's your type of trade. Okay, we're going to cover two more names. This is Boeing, and the other is going to be the VIX. And what we're looking at here on Boeing is a nice tail off the point of control for the year. I wouldn't be jumping in at these levels if Boeing is, which is more of an investment rather than a trade, just because it's a slower mover. It's one of those things where you want to accumulate more towards $60 if you can, but this could be an opportunity. Let's look at what's gone on here. We've had resistance, generally speaking, at this $64, $65 range, the point of control for the year, and then we finally break above. We break above, move back below, and then we're building a base higher, and we're looking at Boeing with the potential for a move back up to this $70 to $73 range, which is the value area high. It's definitely a high volume area where price tends to be attracted to. So if you are long Boeing, I would stay long, and I would keep a stop below. It depends what your time frame is, but I would keep a stop below today's intraday low, whether it be below 64, or you can have it, well, let's just stick with below 64. Okay, and the VIX. Last Friday, there was a big buyer, 108,000 contracts or so, of the 35 by 55 call spread expiring sometime next year. So they're expecting an upside move in the VIX. And today there was a lot of front month December selling of premium, expecting the VIX to stay within this range, not really move anywhere. But there were buyers of the VIX back in January, March, expecting more upside in the VIX, probably related to the any kind of euro news. So this is in a consolidation pattern, and we are above this pivot level 31 where people were buying the VIX back in August and September, and now it's just this 31 level is just really in the middle, and so we have a upside around 36 and a downside around 28. So it makes sense why people are selling. We're selling premium today only because the range, we were at the top end of the range, and it wouldn't be surprising to see a move back down to the 30 level. So expect it. What it's looking like is a bounce in the markets to come in the coming days. But realize it is a short week, holiday week, Thanksgiving Thursday, and anything can happen. But we are at support. Let's bring back up the S&P. We are at potential support. I shouldn't say support. We're at potential support, and we are looking for a move higher. So it's tough to say what's going to happen in the next couple days, but tomorrow with GDP and FOMC minutes, that could be the catalyst to hold this support level and push this market back up towards the 1210 to 1230 level. I wouldn't expect anything higher than that for now. So, all right, have a good night.